let's move on to something that we don't talk all that much about on this program, and that's what's happening in the REIT space, real estate investment trusts. We talk about the housing market, and we talk maybe broadly about real estate, but not the specific REIT strategy. Joining us now to discuss is Gina Szymanski. She's a director and portfolio manager over at AEW Capital Management. Gina, thanks for joining the show this morning. Let's just start with maybe if you could outline for us where REITs sit right now within the current market environment, which has a lot of interesting things going on with what's happening along the Treasury yield curve. You hear our conversation, in the equity market, and I'm just curious where REITs are standing as of today as we kind of see this reopening trade underway.
Yeah, no, thanks for having me. REITs have actually underperformed the broader market. As we all know, the pandemic forced everyone to stay at home, which is bad for headline real estate, right? So office, hotels, malls, everything was shut down. And so as we reopen here, there are a number of property types that are within the real estate area that are benefiting from the reopening. Absolutely.
Well, and interestingly, some people think about REITs as this sort of monolithic asset class, but of course you have data center REITs, for example, that did do well last year because their services were more in demand. So are you seeing the same sort of rotation within REITs that you're seeing within stocks writ large?
Yeah. So last year, the property types that did the best were, as you mentioned, data centers. Just the ramp in online traffic as everyone learned and worked from home was unprecedented. And then you have industrial, as everyone had to shop for their groceries and other goods online. And so you had a number of sectors that absolutely outperformed and benefited from that environment. As we're seeing the reopening, trade progress, you see those areas come under pressure, and the sectors that had done the worst, as I mentioned, hotels, retail, office, are now catching a bid.
Gina, as the economies around the world, as they start to reopen, what does the dividend outlook look like for the REIT sector?
Actually, it's pretty positive. So a number of harder hit sectors did have to cut their dividends, and as rent collections are improving over the last few months here, we've seen a number of companies start to reinstate their dividends. So the REIT group overall is about just under 4% dividend yield, and we think that the dividends will actually grow as the cash flows rebound again as the reopening continues over the next couple of years.
Gina, a rising rate environment doesn't always tend to be good for REITs, right? Because you get that dividend competition, you get an increase in borrowing costs. However, rates are coming from such a low base. Do you think it's going to cause that typical kind of effect?
So interest rates, I think, are taking a little bit of a second step behind the reopening trade generally. But to your point, absolutely. I mean, just a couple of years ago, the 10-year was close to 3%. And so we are coming off a very low base. Cap rates, which is the main valuation multiple that we use to value real estate, is still in the low fives. So the 10-year has plenty of space to move up, and where the companies will still remain profitable. And then I guess I would just add that there's not all REITs are created equal. There's some that have longer duration lease structures that look a little bit more like bonds and do underperform in a rising rate environment. But there are plenty sectors that have shorter duration lease structures, and we don't talk about it a lot. But real estate tends to be an inflation hedge. It's a hard asset, and if inflation goes up, the underlying cost of the buildings also go up. And so they are an inflation hedge.
And, Gina, just finally, something we talk about a lot on this program is, what's happening in single family housing. Obviously, a lot of our viewers are interested in buying their own house, whatnot. Certainly, there's a play in REITs when it comes to multifamily. And I'm just curious, what dynamics you've seen there. There's obviously been a long eviction moratorium in some parts of the country. On the other hand, we've seen the economy rebound, I think, a lot faster than some had hoped, potentially making the ability for people to pay that rent higher than had been feared, if we had had this conversation a year ago.
I mean, the main trends we're seeing in residential and apartments specifically is as people did not have to go into the office, they left their expensive, small apartments in New York and San Francisco, and they left for the suburbs, or even in some cases, San Francisco, they moved to Phoenix or Denver, and so that was the biggest trend. The farther away you were from public transportation, the more pricing power you had. And so that's what we've seen over the last year or so in apartments. But right now we are seeing green shoots in terms of those urban areas like New York, like San Francisco, where we're seeing signs that people are thinking about having to return to the office and maybe coming back to where they used to live.
All right, Gina Szymanski with AEW Capital Management. Gina, appreciate you taking some time to join us this morning. I know we'll talk soon.